Welcome back and thank you for joining us. Joining me in the studio tonight, Ilya D'Amato from Lincoln Indicators and Stephen Hogan from Novus Capital. If you'd like to get in on the conversation, please give us a call. The lines are now open. The number is 1300 30 34 35. Or if you prefer, you can email us at yourmoney@skynews.com.au. Our first question comes from Wayne in Melbourne. Wayne, are you there?
Yeah, good evening, guys. How are you?
Very well, thanks, mate. How are you?
Good, mate. Just a query on Rio for their sort of immediate future and long term. Just your thoughts and prospects on the company as a whole.
Yeah, certainly. There's been a lot of speculation against the big miner, in fact, all miners really, given concern about a slowdown in China. Hasn't materialised yet. We saw GDP growth in China at 9.1% not too long ago. Rio, Stephen.
Well, obviously, it's a great business. Record profits recently, well managed. For me, anywhere below, I've talked about Rio since going back March this year. I talked about it. The buy level for me was $66. Anywhere below that, I'm happy to buy it. A little bit concerned with iron ore prices and commodities on a whole. But look, I think it's reasonably cheap down here, and I'm happy to buy it anywhere below $66. I think longer term, it is a $100 stock for me. So yeah, happy to buy it down here. But it's one of those ones at the moment where you can trade it as well. You don't necessarily have to put it in the portfolio and keep it longer term here and sit on it. It doesn't pay a great dividend. So I mean, you can trade in and out of it. You can write calls against it. But yeah, I'd probably be using this as a trading stock at the moment, to be honest with you. Yeah,
you mentioned the concern about iron ore prices. I guess in the last couple of years, I've seen a lot of sabre rattling and a lot of argy-bargy about iron ore prices. Where do you see the negotiations finishing at the moment?
Well, look, I mean, most sort of economists are talking around the $95 sort of dollar region for iron ore. I think it's around about 119 at the moment. Look, I'd say if it gets down there, if it does get down to $95, anyone holding FMG, I'd be running for the hills at the moment. That's for sure, because that would not be a good outcome for FMG. They'd be losing money in that sort of situation because they are so highly leveraged to the iron ore price at the moment. But look, I mean, I've talked about a correction in commodity prices for a while now, the last sort of 6-7 months, just sort of telling everyone on the show that, you know, we were getting a bit carried away with commodity prices there and just thinking they were going to go up forever, and this China demand situation was just going to continue to go on, and we were due for a correction in the commodity price. So look, I think it would be healthy, but iron ore out of all the commodities is the one that worries me, just because there is such an oversupply of it, or even though we do have a lot of demand. But companies like Rio and BHP are well diversified, whereas stocks that are solely just in the iron ore space are the ones I'd be a little bit concerned about, especially one like FMG that's so highly leveraged to the price. So you just really got to be careful with those ones at the moment. But stocks like Rio that are diversified, I'm still happy with those.
All right, Ilya, what about you? Do you have the same or similar concerns about the iron ore price?
Oh look, yeah. Our analysts have factored in, you know, declines in iron ore price by 2014 and 15, when, you know, more iron ore hits the market, as it were, and we basically start to get a lot of supply. Samanchu, which is one of Rio's projects, is expected to come online. That's going to be a major iron ore play. That's going to lead to a price. So we've sort of all factored that. In regards to Rio, they've had some interesting developments in recent times. They've sold off the aluminium business, or looking to sell off that, which has been a bit of a noose around their neck. They bought a new junior uranium play, Hathor, as well, which is interesting given the performance of ERA in recent times, and you know, that range of mine, eventually they'll get the water out of that, and when they do, they might make some money out of it. It's not going to help ERA shareholders. Yeah, that's right. That's until it rains again, which is, yeah, by the next time the raining season, that's actually when they predict to get it out. It's quite funny, actually. Look. You know, in regards to the iron ore plays, look, BHP gives you that diversified. We're also with Steve. We like the energy story as well, and Atlas Iron, AGO, is another one we do like, and that's based on iron ore price forecasts, which do account for the decline in price that was just described here. But I think you'll probably find a little bit more consolidation in those junior producers and even the explorers, as it were, as you know, all of a sudden pressures on the cost of iron ore make it not viable for a lot of them to actually produce, and they're better off just selling their wares to someone who can make money out of it.
Okay, fair enough. Next question comes from David in Noosa. David, are you there?
Evening, panel.
Good evening.
I'd just like your thoughts. I've got a self-managed super fund with no exposure to any of the property trusts, and I was just wondering if there's any at the moment that you'd be bothered with to have in a portfolio so that you've got that property exposure.
Okay, so you currently have no exposure. You're just wondering whether you should get exposure or not.
Yeah, and are there any stocks that they would recommend, or are they all still duds?
Good question. Stephen, what do you think? Property trusts at the moment, are they on the nose?
Well, yeah, they are. But interest rate cuts is always good for that sector. But look, I always sort of say that even the best stock in the worst sector is not as good as the worst stock in the best sector. So that's one thing to sort of keep in mind. Although I did write a story on my website, stephenhogan.com.au recently. CFX is one that I do like, but I'm underweight that sector. The only stock I do really like is CFX, so I think that looks attractive here at the moment, and it's trading particularly well, considering the property trust sector. So that's one that I've written a story about and talked a little bit about that clients are holding, but we are underweight.
All right.